Welcome back to another AriasWave update. So, on my short idea for the USD against the yen, I would say that we have basically hit a top in the last couple of weeks, I believe. Well, at least since November. Uh, Wave C ended in basically, the 21st, around the 21st of November, and then it proceeded to make a wave D, right? The wave D tried to fall out of the channel, but it got sucked back in with wave E, right? So after that, I posted a couple of short ideas. Um, well, there's been a couple of short ideas, I must admit, but getting it right, it takes a bit of patience. I think that we are now in the process of continuing lower after the BOJ hiked rates to 0.75%, the highest in 30 years. I do believe we will continue lower, based on the macro analysis alone, especially seeing as though the US, the Fed basically cut rates. So we have you know, a, the balance of power seems to be changing, and we should see the yen start to appreciate against the US dollar. So in this video, I'll explain where I think that's going, the bigger picture, and where we will likely target um, in this move lower. So first of all, we need to get a confirmation of a break of 154.339. This low down here it came so close to touching it, so close, but it just bounced. And I believe that that was because of this pattern that I'm going to show you on the 15-minute chart now. Right. So after wave E terminated at the midpoint of the channel, that channel, by the way, is a 2-4 trend line channel on the week 5 wave move for wave C. So basically, we popped down towards the bottom of the channel. We created a wave 1, right? It didn't quite make it out the channel at that point, but it did bounce up to hit this important resistance area, which I'll cover shortly when I zoom back out. But for now, you can see that this important resistant area, it actually stretches back for many, many decades. Um, and basically, you can see that price seems to be maintaining underneath this after it broke down back down beneath it. Um, I don't know. I just think that these are very important points here to highlight, considering this particular structure. Now, you might be thinking this is an inverse head and shoulders pattern, except this is we're at the highs here. This pattern is really good for when you're at the lows, but when you're at the highs, I think it's just reacting to the resistance of this important resistance area. So basically, moving forward with the analysis, we have an A, we have a B, a C, a D, which almost broke down below, and then an E, right? The E wave, I believe, is a week 5 wave move as well. And I think that this announcement was the end of wave E. So I do believe that we should continue lower, especially if we break this particular area here, probably either today or Monday, overnight, depending where you are. It's very possible, right? So this particular area right here in white, the bright white, the end of wave 4 or thereabouts, should signal enough, but price is still hovering at the highs. On the 5-minute chart, I do believe we are seeing a reversal, but it's just happened. It's a little bit early to be getting too much into that, but I do expect this pattern to, the price to continue lower and adhere to the pattern, the entry point being at the lows. So what is the bigger picture view, right? So I did show you the hourly chart. I have shown you the structure of a week 5 wave move. Now, this is not according to AriasWave, it's according to AriasWave, which is a methodology that I basically created about 10 years ago and thoroughly back tested. There are some nuances that differ from AriasWave. Um, so there is a difference. They're very specific differences. Um, yeah, then AriasWave is quite subjective. AriasWave always maintains that there's always 5 waves in a correction, and that is A, B, C, D, E. And basically, I used to teach this. Lately, I just work one-on-one with people. But basically, at the higher level, we do have a wave 1 to the downside. We do have an expanded wave A. Looks like a 5-wave move, but it's not due to the internal corrective patterns. So A, B, C, and then the D and the E. So just because the D and the E look small, it doesn't mean anything, right? I've seen these, uh, yeah, they do happen. It is strange, but it actually provides a lot of answers to a lot of puzzles in the waves. If you've ever wondered what these corrective patterns are, um, these little nuances make AriasWave a very powerful analysis tool. So basically, if we zoom out to the daily, we are dealing with something of the end of a correction. It's probably easier if we just go to the weekly and show you the bigger picture, right? So, so basically here we have oops, I've got some incorrect labels here. Sometimes they just replicate each other. So basically we have since the 70s, a wave 1, 2, 3, and then we have a large 4. So alternation, very small wave 2, quite a more drawn out wave 4. I believe, and so you can see the orange dotted line. It's a very important area of resistance um, since quite a while ago, probably 86 or 90s. So you had an A, B, C up until 2015, and this particular move here is classified as a D wave. It's an expanded zigzag pattern, right? So it's not a full correction. So this is the linkage between basically what I call a CDE pattern, right? I believe that the E wave is a weak 5-wave move, right? It's it may not look like it at first glance, but I believe that it is according to AriasWave structures analysis. So you have a zigzag wave 1, large zigzag wave 3, and a very small zigzag wave 5 at the top. This is all corrective in between. That's why I believe this is wave 1 to the downside. So if we go back to the weekly, what I'm tipping is that this is going to go back to the lows to basically 75.550, you could say. I believe it's going to go down this low. And the reason for that is because wave 5 needs to be the lowest below all previous corrective patterns, and wave 3 obviously has to make one more low. So this is why I believe this is a position trade to the downside. And what we're seeing now is a very important turn of events because we are seeing the BOJ change their stance. And this is a macro trade as well as a pattern trade. So I'm basically incorporating 2 different methods. And yeah, so basically just trading that particular method. The best place to put your stop is at the highs, 156.975 or 156.949. But I do believe that this important area of resistance is the reason why this is an expanded correction. It's given the impression of an inverse head and shoulders, except I don't think it matters at the highs. At this particular point in time, we're still a little bit early on this one, so paying attention, keeping your eyes peeled is good. But look, at the end of the day, you put on a trade, you put on a trade. It's got big downside potential, but it's going to require a lot of patience, and it's taken a lot of patience to get to this point in time where this type of trade setup is happening. And I believe it's a very important setup. These type of moves don't come very often, so when they do happen, it's good. It's a good idea to get in on it, right? So you could wait for a break of the lows, or you could take a trade with those parameters that I've provided. Um, I will give you an update as we move forward, but for now, that's all from me, and thank you for watching.